Well, as I'm sure they have told you, it is for El País, for the business supplement of El País, which is called Negocios, and it will be about the LME. The article is going to be about the LME and the future of the ring, and they wanted to talk to some Category 1 members to have their opinions too about this. So, to start, Sactem Financial is one of the few Category 1 members of the LME. What advantages does the company see in still being in Category 1 in times when most members are in lower categories?
For us, I mean, obviously we've had an opportunity to return to the floor since, I think it was the 4th of September, so about a month now, 4 weeks. And we've always believed that the floor, in particular related to the date system and the ability to adjust cash metal to various prompt dates, that the floor still has value. And I think that through the LME consultation process, I mean, I think we found ourselves clearly supported by the trade members, and the trade members of the exchange, or the trade members, the trade users, are still very supportive of the ring, because the value it brings in the transparency process, in particular around settling forward prompt dates from the 3 months. So, in answer to your question, I mean, we predominantly serve trade and physical metals businesses. We don't have much financial institution business. So the value for us really is still being able to deliver the service that our clients ask us to deliver.
Could you explain a little bit about the transparency for people who are not very familiar with the LME? Because there are other people who say otherwise, that it would be more transparent if it was an electronic system.
I'm not sure how one could justify transparency, really, because I mean the floor is totally transparent. It's a public environment. It's overseen by independent officials. Every price that goes across the floor is monitored and registered. So I'm not sure how the word transparency relates into that argument. I mean, the electronic system works very well for 3-month trading because you've got a dynamic order book, which is effectively a self-fulfilling price from the natural flow of orders. But that's not true for every prompt date that there is. You need somebody effectively to determine that price by way of putting risk capital at risk to ensure that there is enough liquidity on the date that you wish to trade or adjust to. So I think the transparency is on the floor, transparency is on the screen. I don't really see that one is more transparent than the other.
So if there wasn't any ring, would the most affected ones would be the people who trade in more than 3 months?
Yeah, absolutely. Yeah, we've not had a ring for 18 months. So one of the things that we experienced through that time and continue to experience is that there's two kind of reference prices. One is what we call the K2 or the curb close, which is late in the afternoon, and that price is currently determined and has been for the last 18 months determined electronically, and it was determined on the floor before. Now that is an area that those closing prices determine the margin that people place up at the exchange the following day, the variation margin. So the institutions, wanted to participate directly in that by being able to put their orders into what is effectively an auction process, because they state that they are largely, that their business, warrants a voice, if you will, so that there should be a broader participation. I think what we experience from that is that the date system is very complicated. So if an order goes in at 3 months, or somebody then puts in another order at roughly the same time, that's an adjustment from say three months to 6 months, or maybe even puts in a trade which is the price between the 6 months and the 9 months, it becomes very difficult for the exchange to adjudicate about which one of those 3 orders is the order that should determine the closing price. So as a result of that, sometimes more often now than they did before, the spreads can close out of line. We've seen it this week with aluminium, where we've seen closes in certain spreads between dates where the valuations that they've been settled on the order flow, but the following day those prices have adjusted back to where the real value is on a cash and carry basis, on a financing basis. So, one of the things that the floor continues to do, and it does it now we've gone back to the floor to do the second ring official close. The exchange agree that that the floor is working very well in settling the official close, and that official close is really the cash to three, is where the trade clients pitch their physical deals. So they're quite keen to keep that influence, almost, I guess, to a certain degree, by comparison, the influence that the financial people want on the margin close. The official price, which is the price that the trade use to strike physical deals, they might say, okay, I'll sell you this amount of copper at the LME official price plus $30 or minus $30, depending on the destination origin that the deal relates to. So the official price still has a very firm link to the trade, which is why they supported it being back on the floor and why it is back on the floor. The issue with closing the curb prices electronically, we continue to work in earnest with the exchange to get the best possible results. But there are still times when we feel that the valuations of the spreads are not necessarily settled to a place which is a valuation that we would think is completely accurate.
They usually go upwards, like more than downwards.
There's no real pattern to it. The problem is that if you take your argument of transparency really follows to an argument of liquidity. So, as I said, I think in the 3 months, there's a lot of liquidity. We very rarely quote 3 months. We basically just allow our clients to trade on the LME Select order book, and they trade their 3 months. And most people are happy to do that. Now, what will happen with the financial institutions is that they will want to, as that 3 months matures, so the next day it's 3 months minus a day, the following day it's 3 months minus 2 days, and so on. They will want to roll their positions because they want to keep their positions open as financial contracts rather than going to delivery. Now, the trade differently. Sometimes they buy for 3 months, they take delivery. Sometimes they get to a week before delivery and then the shipment's not quite ready, so they adjust for 2 weeks. They might adjust for another 2 weeks. So the different people want different things. So, being a ring member gives us the ability to service that segment of clients that are loyal to us and we're loyal to, which is the real trade. We're not really interested in financial speculators and algos and that sort of stuff. That really does belong, well, quite frankly, on another exchange. But we don't really get involved with that sort of business. So you've kind of got these two defined user groups, and I think that's really the debate. Really, what is the LME for? Is it servicing real trade business, or is it servicing financial speculation? And I think that's the dilemma the exchange faces.
But I'm sure this financial speculation has been on the LME for a long time.
Absolutely, yeah.
Why is now a turning point?
I think now's a turning point because I think that, as you say, they've always been there and they continue to be there. So the market model as it stands clearly has some purpose, otherwise they wouldn't be trading it. I think they argue that if the market model was to change to be more electronic, they would be more effective in the way that they manage and calculate risk, that their processes could be more straight through processes, and that they could rely on processes that are very similar to other exchanges. So that where they've got back office risk systems that relate to futures trading, say on COMEX or CME, the LME model, risk model, is different. So I think there are synergies that they believe that they can have if the model was to be more electronic.
And are they more powerful now than years before? Are there more of them?
That's a very good question. I don't think so. I think that the backbone of the business on the LME is still physical traders. The relevance what you tend to find with funds is that their exposure to a instrument tends to be relative to the economic relevance of that instrument. So they might say allocate 10% of capital to oil, but its economic relevance in the world is like 10 times oil is 10 times, say, copper. So their exposure to copper is always going to be relatively much smaller than it is to oil. So commodity funds as a whole have deteriorated. I mean, there aren't so many pure commodity funds left. Back in 2012 onwards, a lot of commodity funds, like Clive Capital, Cron River. If you gave me a bit of time, I could name quite a few more. Clive, they lost assets and some of them folded. So pure commodity funds are actually less 10 years ago than they are now. So the fund business that you see now tends to be more like ETF type, indices type business. People that have got exposure to sort of like ETF type of businesses. And some hedge funds, there's, I guess, more algos would like to get in the space if they could. But I think there's a big debate about what value algos actually bring. Even at the regulator level, you're seeing increased scrutiny from the FCA on algo trading as we speak. What do those strategies actually do in terms of enhancing the right outcome for clients? Discuss. I don't have a strong view, but I think the regulators is becoming more and more inquisitive to the value of algo business.
And let's say, and I'm not saying this will happen, but like in the worst case scenario, let's say that the LME changes the focus and gives priority to financial traders than physical traders. What consequences would this have in physical traders or in the market in general? Because I mean, many of the things we use today are made of metals, and it's these physical traders who provide them.
I think that the my personal view, and one that I've expressed openly into the exchange, is that the data system is really sacrosanct in keeping the trade happy. Because if you look at some of the distortions we see on COMEX copper rolls, it's generally as a result of hedge funds and it's a result of the open interest being too high in one particular contract. So because they do traditional futures contracts, the open interest all comes to one day on that futures contract. And what we see is often that through that roll period, the spread between the now month and the future forward month can move because of the weighted positions. Now, is that because there's a lot of positions to move, or is it because people trade that spread and then they're able to exaggerate the move? Discuss. I can't really say one or the other, but more and more we see people coming to us wanting to do. More and more we see people coming to us with requirements to do cash and carry in COMEX because they would rather go to delivery for 3 or 4 days and then deliver back than get caught on the roll. So I think the answer to your question is that as long as the data system is there, which gives the trade the ability to adjust away from a massive concentration of where they are, where everybody else is, then I think that's fine. And I think we proved that over the last 18 months that the floor was closed, and the trade, I think, we're relatively happy with the business that that they could get done. So I think we've proven we can live without the floor. I think the debate is whether or not the floor continues to add something on top, really.
Okay, so this commodities boom that we have had in the past year, don't think it has a. So let me rephrase. So if let's say if the LMA prefers to gives priority to financial traders, like for common people, would prices of things such as laptops, cars would go up?
No, I don't think so. To be honest with you, I think that the flat price of metal as a component part to the retail consumption price is quite modest by comparison. You've got a lot more to consider in that chain. It's like coffee, I mean, coffee is a very good example. You see the price of coffee in New York has almost doubled in a year. You're not going to the coffee shop across the road and paying £5 for a cup of coffee. It might have gone from £2.20 to £2.40, but it hasn't doubled. So the raw component part of metal within the overall retail consumption price it's only a small part of the overall price. So I wouldn't see financial distortion affecting retail prices, to be honest.
Okay. And well, the LME says that when they did the consultation, like the opinions were quite fairly spread. There were half and half, but there are only now 8 category 1 members. So this means that there are a lot of people from lower categories who support the idea of having the ring. But what do you think there are less people who are, or less companies that, even if they support the ring, are actually willing to make the effort of being at the ring?
Yeah, I mean, I think the view of the ring dealers is that the consultation process clearly depicted what the financial institutions want relative to the trade, and I think the trade rightly said, well, we are the main driver, main user of the exchange, and they supported, and I'll be honest with you, I was surprised, but they supported the floor more than I expected them to. So I think that there was a feeling through the consultation process that the floor was vulnerable not to reopen. But the support from the trade was overwhelming. I mean, overwhelmingly, to me, surprisingly overwhelming. It would have been against the spirit of the consultations to not reopen the floor. I think in answer to your question about the continuing economic relevance of being on the floor, I mean, it has been seriously diminished by taking away the order flow of the K2 the K2 curve close. So we were able to justify keeping that floor team based on first, second ring, third ring in the afternoon. It's always been a little bit of a kind of optional attendance, but then we did a lot of business on the close, and that's been taken away from us. So that economic relevance of the floor to the dealers has diminished by 50% plus. And I think that's where the LME Cat 1 members were quite angry that it was never in the consultation process, not the original one, that the LME will argue that they consulted separately afterwards, but it was never in the original consultation process to say, would you like to go back to the floor, yes or no? Would you like to go back to the floor partially, yes or no? It was either, do you want to go back to the floor or do you not? And the support was to go back to the floor. So for them to then effectively override what was being asked and say, well, you can go back to the floor, but you can only do a third of what you did before, that wasn't in the original consultation outcome. Now, they will argue that they then further consulted on that, but to put that in perspective, the further consultation received 8 or 9 replies from the Cat 1 members, and the first consultation, I think there was 180 replies. So, the exchange did really go off on a limb and say, well, we're still going to basically go more electronic, despite the fact the consultation said that, that the floor should reopen. So that's really, I think, the beef from the Cat 1s is that it was in the original consultation, it never said anything about reopening the floor for partial business. Yeah.
And do you think the LME is conscious of that, and that's why, or is aware of that? Sorry, and that's why they said that, or they think that it might come to a point where there are less than 6 members in the ring.
So I mean, I think the problem is now is that the Cat ones have to decide whether or not the economic value of being there is justified, and I think we all agreed to go back to the floor to try and because our clients wanted us to go back to the floor as well. It's not, let's go back to the floor, it's a jolly good idea. Our clients, through the consultation process, through direct consultation with us, said, we want the floor to reopen. We couldn't not go back to the floor because our clients were saying to us, we want the floor to open. Now, if the exchanges said, well, we're going to close the floor, of course, that would have been them closing the floor, which they didn't want to do. So now we're in a situation where we've gone back to the floor, we've got reduced business. So now it's a question of economics. Does the business that we have in the first and second ring really warrant keeping the floor going? And that's a decision that I'm sure individual companies will make as time goes on. And if the consensus starts to drift to it's not, then you can see a place where the membership of the ring falls to a level where the ring has to close.
Because besides paying for being category 1, you also have to have like a team specially trained to go to the ring.
Well, that is it. Yeah, I mean, so I have a ring team that's got about 20 odd people on it. 20, 25 people on it. So, as you say, they've got the skills, and we one of the things that was a little bit difficult for us was that we, through that period, we didn't make any redundancies. So when COVID came and the floor closed, we didn't make any redundancies to our ring team. We continued to pay them despite the fact they couldn't go to the ring. So we made that financial sacrifice so that we could continue to support the ring.
I'm guessing they have high salaries.
I mean, everybody's got a high salary compared to somebody who's got a lower salary, but in financial services, the biggest bill that you have is somewhere between IT and salaries, right?
And
I don't know which one's bigger in my firm. I can't remember off the top of my head, but there's not much in it, I don't think.
And is it hard to find staff qualified to go to the ring?
Yeah, you can't really get them. You have to train them. So we are still training some people. We're still training some people.
So you have hope that the ring will continue?
Yeah, we would like to see it continue, but look, I'll be honest with you, as I have done already, we do need to look at the economic relevance of just being in ring 1 and 2. Ring 3 is no one's really... We put someone in ring 3, but there's about 2 or 3 people in ring 3 most likely. If I was honest, I still genuinely believe, as we said in the consultation process, as we went on record to say, we believe that if the K2, the curb, second ring curb, was settled on the ring like it was before the close for the pandemic, we believe the prices would be a better outcome for the exchange, and we genuinely believe that. And this week has been, there's been more debate this week about whether or not that there should be some conversations to return that to the ring than in any period of time in the last 18 months. Because this week, we've had some really busy volatile markets in copper and aluminium, and the consensus is that the ring would have done a better job settling the second curve close.
Because you said that usually the second one that goes electronic, it's not very reflective of what the price should be, but then it gets settled the following day with the ring.
Not so much with the ring. It's more to do with the main difference is that when we're on the ring, if there's an audio aspect to what you do. So if somebody comes in and tries to borrow or lend a spread, and that order or that's being shouted into the ring is clearly at a level which is out of line with all the other spreads in that matrix, a dealer from one of the teams would normally spot it and say, no, I'll lend at that price. And at that point, the order's filled and it's done. What's happening at the moment is that because you can't hear the orders going into the machine, it's very difficult for the exchange to look at 90 different prices in a 3-month window, in a 3-minute window. So if this price goes slightly out of line and this price goes slightly out of line, it's very difficult for them to watch it. Whereas if you could hear it, you would know. And it really is that simple. So what's happening is that they're saying, that Jan Nov spread was, six contango, but then the spread next to it was 3 back, and we're going like, well, it can't be 3 back if that's 6 contango. It's got to be 7 contango because there's $1 for that period. And they go, no, it's 3 back because there was an order at 3 back. Well, it was only an order at 3 back because nobody saw it when it was 5 contango and lent it. So because it's such a complicated matrix, it's very difficult for people to catch their eye on it in a very short period with lots of orders going in. And that is the debate that we're all working on within, and we are working with the exchange. And my guys are sitting down with the exchange today to talk about some aluminium closes of last night to say, look, how can we help you make it better? I mean, we'd love to put it back on the floor, but if you don't want to do that, fine. How can we make it better? But that's the issue. And now that temporary misalignment, will it come back? Yeah, it will. But of course, the irony of it is that the reason for putting it on the screen is people say, well, we want broader financial participation to get a purer price for margining, but actually they're not, because the margin on that spread is incorrect. It's incorrect.
And how do other metal exchanges do?
They don't have the date system.
Sorry, because today is cleaning day, so there are some noises
that's all right.
in the background.
Yeah. No, they don't have the date system, so it's an irrelevant point because all they do is have to settle 5 or 6 contracts, whereas we can settle up to 700 dates.
And do you think that if the ring closes, the LME's role in the metal sector will lose relevance?
I think if they lose the date system, it will lose massive relevance. I think if the ring closes, the debate is, can the date system continue without the ring? In fairness, it did for 18 months. But if the date system is lost, then the relevance to the LME is lost as well. I'm absolutely, unequivocally convinced of that.
And just to finish, in this 18 months that the LME had the ring closed, what consequences did you see in your clients?
The 18 months it was closed? Yeah. Well, the first 4 or 5 months were quite difficult. I think that we saw a general lack of liquidity, and I think it was difficult for our clients to get business done. But I think that as the community started to become more cohesive and started to work together better electronically and also inter-office, then we started to see more effective pricing, and I think our clients at least, were relatively happy with the service they were getting. But it did take us about 4 or 5 months to make that adjustment.
But did you think that could have gone on, stayed with that dynamic?
Yeah, I mean, as I said, I think that prior to consultation process finishing, we would have seen a likely outcome: the floor would not reopen. But as I said, there was a very strong support from the trade for it to reopen, and for that as I said to you before, I was a little bit surprised how strong the feeling was, but pleasantly so.
Is it public, the cost of being a Category 1 member?
Well, it's public. If there's a fee that you have to pay the exchange, that's public. I don't think it's much different than being a Cat 2, actually. Yeah, so there is a membership fee, to answer your question. And there is a membership fee. So, I should know, but I don't know what it is. Not off the top of my head.
Is there
it's not.
Sorry. Is there
no, so it's not prohibitive.
Okay.
Doing the business. Yeah.
Is there anything else you would like to add, Mr. Bailey?
No, I think that the LME has gone through an interesting 18 months, and I think the consultation process was in the end a valuable process. we continue, as we always have gone on record to say, that we see the core relevance of the LME is to serving physical trade clients, and that's the purpose of it. The LME was never, and I'm only saying this to you, I've said it to the chief executive, the chairman, and just about everybody else. The LME was never a futures market. It was always a cash market where you buy metal for today, or you adjust it for a price for another day. It's not a futures market, it's a deferred cash market. And that the characteristics of that market were originally set up to service, 3-month contract was there to service the period of time it took to move copper from Chile to London. And many of the practices that are in physical metals trading today are embedded and are symbiotic with the rationale and the continuing reasoning of the LME. So, I feel very passionately that the LME's purpose is to serve physical clients, and that financial institutions, speculators, hedge funds, call them what you want, are more than welcome. But that the rules of the exchange should facilitate the workings of the real users, and the rules of the exchange should not be flexed to satisfy financial institutions. And I feel very strongly about that, because the purpose of the LME is to facilitate the easy supply and distribution of physical metal into the manufacturing processing space. That was why it was set up.
Well, thank you very much. I will send you the link once it's published. I think it will be in a couple of weeks.
Is it going to be in Spanish? I only speak French and English. I don't speak Spanish.
Yeah. Well, if you speak French, you may understand a little bit.
A little bit of it. And whereabouts are you today? Where are you dialing in from?
In Cardiff.
Oh, you're in Cardiff?
Yes.
Okay. So nowhere near Latin America then?
No.
Or even Spain? No.
No.
So why do you live in Cardiff?
Because I just moved in because I'm going to do a master in data journalism. But I'm still freelancing for El País. So, yeah.
Oh, great. Well, best of luck with your masters. And very happy to have spoken to you. And if you need anything, if there's any quotes that you want to make, if you could just check back the rows and stuff, just so that the quotes fit within the context of what you're trying to write, that would be great.
Okay. Yes. Well, thank you. Thank you very much.
Thank you then. Yeah. Bye bye now.
Bye.